Futures point to a flat open in front of a heavy earnings calendar, jobless claims, and the housing price index. Overseas, the European Commission said the region's economy will shrink again this year. In corporate news, Hewlett-Packard trades lower following a miss on the quarter due to PC sales and guidance that came in lower than analyst expectations. I'm Jill Malandrino, and the morning call starts right now.
Good morning, everybody. I'm Mark for T3 Live.
And I'm Jill Malandrino with The Street, and together we bring you the morning call. We closed down for the first time in 4 days yesterday. Pretty quiet on the overnight. We're looking at jobless claims, the housing price index, and a relatively full earnings calendar today. So, Mark, let's take a look at some SPY levels.
Exactly. Pretty boring day yesterday, pretty boring day the day before. Today I see much of the same. Look for your first level, if we actually do pull back a little bit, look for the 21-day moving average, 134.20-ish. I'd be looking to probably buy it. We've been holding that trend. I don't think that's going to change. And at the same time, obviously on the upside, look at 13,000 on the Dow, see what happens. First, it hit it the first time, took a break. Eventually it will get through there.
Okay, so that 13,000 level bouncing around there is really going to be a key psychological level. Moving along to the sector spotlight, we're going to go into my favorite one, the ag group. That's my 2012 story. I think the back half, all the fundamentals are on fire. We got some great news out of the Canadian co-op last night that they see potash demand to really kick it up the end of 2012. So the fundamentals and technicals are really lining up well for this group. Let's kick it off with Mosaic, my 2012 pick.
They are, connecting right now. You're looking at Mosaic. You look at the daily chart. It did just break above a key level, probably around 57, 57.50-ish. Looks like it's free and clear. If it actually gets above 62 level, it's going to hit $70 in the short term. And you actually look at the weekly chart. It broke above its 200-day moving average, which is significant. Again, looks like 65 to 70 is in the cards in the short term.
Moving along to Agrium, ticker AGU, we're looking for some really nice, robust margins here. Their nitrogen pricing looks real good because they have such cheap access to gas.
This is a little different chart pattern. It's in the top third of its trading range, bounced off its 200-day moving average probably about 2 weeks ago. Let it digest here a little bit. It's probably going to bounce around between 80 and 95. Once it breaks above 95, you would have to go back to your weekly charts, which I seem to be doing a little bit more these days. And it looks like it's free and clear above 100. Moving
along to CF Industries for 2011, traders love to be in and out of this name. And this was clearly the outperformer of the group, and we're looking at some 52-week highs here.
Certainly best in breed on CF, and it's trading at, again, top third of its trading range, right about all-time highs. If the ag sector continues to move, which it seems like it will, in time, this one will be the first to go. You will see above 200, and obviously it's a little bit thinner trading name, not as many shares outstanding, so this thing can go. Watch out.
If we're going to talk about the ags, we have to look at farming equipment. Let's kick it off with Deere, ticker DE. Look, they see long-term demand as well. They are reinvesting their capital, building new factories, and they're just looking to be able to keep up with that demand.
Yeah, John Deere actually had a pullback with earnings, and again, the pullbacks, it's as scary as it is, it seems like it's always buying opportunities. It basically hit its 200-day moving average, seems to be just waffling around at that point around there. It's still staying above there. In my opinion, at some point it's going to be a buy in order for it to head higher, obviously, as the other sectors go.
And rounding it out with CAT, this is another name too. They're reinvesting their capital. They are increasing their head count. That's great for the economy overall, because if machinery sales are moving up and we need to create some jobs, that's a story for the tape right there.
Boring looking chart, so tight, it looks like it's just straight up, and it's been basically since the beginning of the year. Looks like it's free and clear to make new highs. Obviously, new highs. It did hit tag it yesterday. I think you'll waffle around here probably for another week or so, but it's going to be a slow and steady grind up.
Okay, we're going to jump into a quick commercial, and when we get back, we go into the trenches.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. We're going to jump into the trenches with a theme that's a little bit different for us for the trading crowd today. We're going to look at the Dow theory. Typically what that is, the Dow Jones Industrial Average and the transports tend to trade in tandem with each other. We're up here all the time saying the transports and the industrials lend that true support to the market. What we're seeing right now is a pretty big divergence in the two. Why is this important? Sometimes this can confirm composure in the market is changing. So that's something that we're going to keep a really good eye on, again, because we're looking for different indicators to confirm whether or not we might see a reversal. So let's take a look at some names that we typically don't trade in, but because of that healthy dividend being paid to hold the names, let's look at GE.
Yeah, I think that's the key, Jill. You're talking about there's a lot of stocks on the board that really are trading at new 52-week highs that are dividend, playing stocks. Obviously, big caps. It seems like that's where a lot of money is being put. A lot of big institutions are moving to that range, to those type of stocks. Obviously, the dividend's attractive across the board. GE, basically basing at new highs, not all-time highs. I apologize. But if you actually look at the weekly charts, you have to go back to 2011. $22 looks like it's in the cards. GE is hanging in there. During the day, it's not doing a whole lot though.
Moving along to UMP, this one's also it's 50 DMA. Another one, 6 years of straight dividend increases.
Go back to the dividend. That's interesting. And again, boring from a day-to-day point of view. Seems like it's grinding higher. Railroad's not the most exciting unless you're Warren Buffett at this point in time. Not a whole lot from a technical point of view to say, let's get in, let's get out. But you could just tell every pullback seems to be viable.
CSX 21 is an important level for this name. Is it time to short, or can we potentially build a new position here?
I'm never the first to the party on the short side. I like to see it proven at this point in time. And for the last 6 weeks, that has not been proven and not been the case. It's always been a buy on pullbacks. At this point, I'm going to stick with the trend. Buy on the pullback. Roughly use 2050 as your gauge, at least on the short term. Looking for a move back to 23, in the near term. Moving
along to Boeing, aerospace is another one that we have been looking on as well and starting to get a little bit more constructive.
This is something I actually put in my swing yesterday. Very tight pattern. Not something I'm going to necessarily look at on a minute-by-minute basis. Very tight last few weeks since the new year. It's been in a very tight range. Looks like it's ready to move up and out of that pattern and to a new high. Rounding
it off with UPS, oil has been one of the biggest conversations that we've had all week. The higher the oil goes, the more expensive it gets for these companies like UPS, FedEx, for their input costs, and that could eventually be passed on to the consumer. This is true. UPS, you would think, with oil prices going up, and obviously, with how many planes they have, that they might be affected, and it might happen. To me, right now, I'm not necessarily going into this idea, but at the same time, it could be a possible rounding top, or just a nice little base that we need to wait and see what happens. We'll have to wait and see. It hasn't worked itself out yet, so I'm just watching this for the time being. Moving along to quick hits for some quick cash. We can't start the day unless we talk about Apple. Some interesting news on the overnight that China's going to allow the company to sell the iPad in Shanghai. That's a numbers game right there for sales. Purely a numbers game. It only gets better. The story only gets better for Apple at this point in time. They obviously are having a conference call today. I believe it's 10 a.m. Tim Cook, we'll see what he has to say. Is a special dividend going to be put out, or is it going to split 2 for 1? We will have to wait and see. If either those two announcements are made, this stock is up 15 to 20 points very quickly. New highs. Look out. I love this name. If it wasn't so capital intensive, I would still be buying here. Moving along to IBM. Evan and I talk about this one all the time. Buffett just filed his 13F. It's one of his top 5 holdings. Yeah, Buffett was buying, back at 175, 168-ish. I think that was when he filed it. Yeah, it looks terrific. Obviously, Big Blue. It's been, in the news recently, but if you actually look at a much longer term chart, it, basically broke a multi-year high a few months ago, and it just keeps grinding higher. It's just the stock that keeps giving at this point in time. They got their act together, certainly. Moving along to Triple M, another dividend name for you, Mark. This thing is trading at just below 15 times real treat. The yield's at 2.7%. There's a lot to like here on the fundamental side. A lot to like on the fundamental side, and the fact is, it's funny. I'm going to a lot of these stocks that I don't trade on a day-to-day basis, but they're very good long-term holds. They seem like they're very consolidated technical patterns that they all are trading in the top third of the trading range, looking above basically 88, 88.50 as a new buy for Triple M. Moving along to Goldman Sachs, is this a short covering here, or is it starting to get more constructive?
the pullbacks are getting less and less. So from my point of view, it seems like, the range is getting a little bit tighter, which is what I want to see. 110, if it comes back down to that level, I'll probably be looking to buy it again. But at the same time, if it hovers above the 113, 114 level for a period of time, look out, the stock's back to 125, 130 before you even know it.
And rounding out to the silver ETF SLV, we're seeing some consolidation here. Is it potentially catching its way up to GLD?
GLD obviously had a 2-day big move, almost at 1,800. Silver, the stepchild, as I like to call it, it is going to get going. I actually got involved with it a little bit yesterday. I think, if it gets above about 34.50, you're free and clear back to 38 on the SLV, which is the ETF. So keep it on the radar, and it's something I'm certainly watching.
Okay, so we've got a lot to look at today, even though it's relatively quiet on the news. We have to keep those positions nice and tight. There's a lot of risk management that you have to do when the market has been so tight. I mean, the ranges have been really small. I mean, when was the last time I saw like a 10-handle range? I can't even.
You don't see you see a 10-handle range. You see a tight range when the VIX stays below 22. When there's not a lot of risk out there, you got to change your trading style from a trader's perspective, from a short-term perspective. You don't have to be as nervous, but understand your holding time has to change a little bit. You're not going to get that quick, the quick hits that we were getting all last year when the VIX was at 35 to 40. It's not going to happen like that.
Okay, thank you, everyone. That's your morning call. Don't forget to catch Mark and the rest of the team every day as we wrap up the charts for you.
Have a good night.